Hello traders, I'm Akamil Forex and welcome to my YouTube channel once again. It has been a while I dropped a video on this channel. So today I promise to give you a very nice content on this particular video. So stay connected to the end of this video. So we are going to analyze GPUSD together so you can find ways levels to take a trade on this new coming week, right? So literally now I will now be looking on my comment section the topics that you want me to discuss. Then I'll make video for it for you. So make sure you put in the comment section the topics that you want me to discuss, the topics that you want me to clarify it for you. So I will literally do that for you in my on my videos on my next recorded videos, right? So in this GPUSD, as you all know, or some of you know, I trade GPUSD and gold, right? So this GPUSD, let's analyze GPUSD. And as literally you can see that in GPUSD, we are this is in the daily time frame, and currently we are in an uptrend, right? So as you can see from this here to the up here, we are literally in an uptrend. So where is this particular uptrend begin? That's going to be a demand level. So let's just mark our demand level where price literally respected before moving to an upside. So that is where we are price came to respect before moving to that upside. So where is price now going? We all know that if price leave demand, where is it going? It's going to what? To a supplied level. So in this particular level here is our supplied level. So hence, since price left this demand, we are going to what? To a supplied level, right? So I'm going to make sure that I take this analysis from the beginning of where price is literally going and how we were supposed to be taking trade previously up to the current market. So you literally know that this particular strategy it works, right? You see it live that this particular strategy is work. So we literally know what we are doing. So from here, as we mark our levels on the daily time frame. So we're going down to the 4 each time frame, right? So looking at this particular chart in the 4 each time frame, right? So if you are following my videos, although I'm not all that consistent, due to some one or two reasons, I'm not all that consistent on uploading my videos, but I promise to make sure I now upload my videos consistently, and I'll be giving you a great content that will literally help those who cannot afford a mentorship, who cannot go anywhere and register for mentorship. If you come to this page, you literally get what you need, and then you go and trade and make a lot of profit there, right? So if you check on this particular one, on this particular down here, we can literally see that when price keeps give us this move to a downside, when price comes down here to create this particular low, move high, come to this level, right? When price approaches here, price literally left this level here, which is our level of what? Our level of inducement, or which is an inducement level. And you all know that, or if you follow my videos, you can literally see I said if price tap into a level of demand or supply and take off an inducement, that particular inducement tends to be a change of character, right? So this particular level here is our level of inducement in the 4 hour time frame, right? So in the 4 hour time frame, since we have this particular level as a level of inducement, which has now price tap into a level of demand before taking that level, then this particular level is now going to be a what? It's now going to be a change of character. Very simple. So since price tap into this level and then going to is turning this to be a change of character, the next particular level, which is going to be a supply of reaction, this is where we are expecting price to come and react. Then that's why you see price comes to react on this particular order flow, or comes to react on this fair value gap here. If we are if you know our institutional reference points or reference level, a fair value gap is part of the seven institutional reference or reference point. So price tap into this particular level. That is where we are expecting to see a reaction right? Because if price give us a change of character, we are literally going to look for price to continue moving or moving to an upside, right? So since price give us a reaction on this particular level, we don't literally need this particular one. So we are looking to see where is our inducement, right? So when price was moving to an upside, give us this move, calm down, then take giving us this internal structure, give internal structure. This particular leg here is not an inducement. Why? Because these particular three candles are found inside this particular candle. So we call this candle as an inside what? As an inside candle, right? So we look forward to see where price literally give us an inducement and where we are expecting it to come what price to come and take and later give us the what give us an entrance. So if you look at this particular leg here, if you look at this leg, this particular level is our inducement. So hence that's why we're expecting or we see price to come out to come to take this particular inducement here, right? We want if price is moving, price literally target what? Target where the liquidity is before price come to take this level. So this is where the liquidity is what is resting, and that's why price open this particular gap and comes to take that inducement, which is the liquidity before moving. So this is supposed to be your level of interest or your point of interest or your zone of entrance on this particular order block. So if price gets to this particular order block, you just move to the 5 minutes time frame or the 15 minutes time frame to find a change of character in the lower time frame before you take the trade. So price tap into this is going to be the move. So when this particular level is a decisional point of interest, whilst we have this particular order block resting here as an extreme point of interest, right? So the first one is the decisional point of interest, and the second zone is an extreme point of interest, right? So if price gets to this particular extreme point of interest if it gets to the decisional point of interest without giving us a reaction or a change of pattern in the lower time frame, we wait for this to come to the decisional to an extreme point of interest, right? Before we take it. But in this case, we can literally see that price respected the decisional point of interest and take a action, give us a rejection, followed by a bullish engulfing, and then you take the trade to an upside. So if when price moves to an upside, the next it has taken this particular high here, right? So since price has taken this particular high here, we will be looking to see another inducement. As you can see here, this particular leg here we are seeing here, this particular one here is not an inducement. Why? Because these three candles are found inside this bullish candle. So hence it is an inside bar, right? It's an inside bar. So hence our inducement is gonna be this particular level, this particular pullback here. This is gonna be our inducement, right? This particular level here is gonna be our inducement. Let me take off this. So if this one here is gonna be our inducement, and that is where the liquidity is resting, right? So since liquidity is resting there, we make sure we see our levels. That's our institutional reference points to take a trade. First, it is this unmitigated wick, right? This is unmitigated wick. So which is our decisional point of interest, and this particular order block that's also resting here as our extreme point of interest. So once again, you have seen price get into the decisional point of interest, and it has reacted, moving to an upside. So this is where you take a buy. So in this particular, if you are using these particular approaches, you are going to have a winning trade here, right? You are going to have a winning trade here, and then this next one too is also going to be a winning trade for you here. So if you take another long position here, you're going to have another winning trade here using this particular approach, using the approach of inducement, change of characters, break of structures, right? This is just an XMC, or you can call it ICT, right? So in this case, you can literally see that when price break this structure to an upside, giving us a break of structure, that is the structure is what is still bullish, right? We have a break of structure here in this particular leg here. So the next following place where we'll be expecting price to give us an inducement is here. So when price come give this particular high here, imply this give this high, it fails to come and what and take this leg here, which is an inducement, right? So this particular high, that is the high that was given first, and we'll be expecting price to come and take here, which is going to be an inducement, right? But price fails to take this particular level, and it creates another high, because this particular high here is now higher than this because it has taken it, and it fails to what to come back again. It creates this particular high to as well. So after this high is created, we'll now have another inducement, which is this particular leg here, this one here, as another inducement, right? So when price take this inducement, that is the liquidity resting there. So hence we are expecting price to take it, and we move to an upside. So after price taking it, what taking it, that's taking the liquidity. So when price give us this particular break of structure that we have here, when price break this structure, what where do we have our validated order block? It is this particular candle here. When price take here, it creates this order block, leaving a fair value gap here. So hence this particular level is now going to be our point of entry. In this case, we don't have a decisional and an extreme, right? We only have this particular decisional. We don't have any extreme. Our extreme will be this particular unmitigated week, right? This particular unmitigated week. So we have an extreme. I didn't see it earlier. So this particular unmitigated week will have been our extreme, but yet price tap into this, and then we have moved to an upside, right? So we keep on taking the buy, because when price change a character to an upside, now we'll be going to be bullish, and we'll keep on taking the bullish. So in this case, which high is created? We have this particular level, which is a new high that is created. When price create that particular high, what do we have here? We have an inducement here, right? We have an inducement resting this particular level. So this is now going to be our inducement. I hope by now you literally understand why I'm marking there as an inducement. If you don't understand, please let me know in the comment section, and I'll make a quality video about an inducement separately to make you guys understand it well better. So now, since we have here, you can now see that after price has taken this level, this now tends to be our major high, right? This particular level here tends to be our major high, and then we have this as our order block to as well, where price come to tap into this, and then we continue, or it continue buying. So in this case, you'll be having a four consistent buy trace, right? Called four consistent, one, two, and then the one we have here and then here. So now we are now at the current market. So where are we now expecting in the current market? Where are we expecting to see price to come into before we take this trade? And this particular trade should be a buy. So after price giving us this break of structure here, so price continue breaking structures to what? To an upside. So price giving us this break of structure here, right? So when we have this break of structure, the when we have this particular break of structure, price give us a massive push through an upside. So currently, where is our high? Our highest point is this particular high that we are seeing here. This particular high here that we are seeing, that's our current high. And with the inducement, where is now the inducement? Literally, we can see that this leg here is the inducement, and that is the inducement that we have here, right? And since price give us this inducement, where is now going to be our level of what of decisional point of interest is going to be this particular order block. This is our point of interest that will be expecting price to come into, and then we continue moving bullish. So hence, in this particular level, this is our decisional point of interest. So after this decisional point of interest, we will now be expecting where it's now going to be our extreme. We'll be having an extreme to be as low as this particular level, right? This is now going to be our decisional point of interest. So we have our extreme point of interest here, and then our decisional point of interest at the top here. So if price fail here, price closed below this particular level here, we'll be having a short time what a short time sell, right? If price close here, we'll be having a short time what a short time sell to this particular level, and then we now take it to an upside. But if price didn't do that, it tap into this decisional point of interest, we'll continue what we continue buying to an upside. So hence, this is the level that we are expecting price to come into for us to continue bullish on this particular trade. And this is GPUSD on the 4 each time frame where we are expecting our price to come into. And note, if price get to this points of interest, we move to the lower time frame, which is 15 minutes time frame or the 5 minutes time frame to get a shift in market structure or a proper bullish engulfing, giving us a shift in market structure in the lower time frame. That's the main point there to confirm price continuing to an upside. Then we can now take the trade to an upside. So guys, this is GPUSD and I'm Akamlo Forex logging out.